Okay, let's unpack this. It's Wednesday, April 2nd, here in the U.S. And wow, it's been a whirlwind of information.
Absolutely.
We've been waiting for the full details on President Trump's announcement. He's calling it Liberation Day for the U.S. economy. And those details have just landed, so we're jumping right in.
That's right. And as you know, big economic news like this, it often sends ripples through the financial markets almost immediately.
Hmm.
For you listening, our goal today is really to understand the core of what's happening, focusing specifically on how the markets are reacting and what that might tell us.
Right.
We're not going to get sidetracked by the political debates here, but instead concentrate on the potential impact on the financial landscape.
Exactly. We've been poring over a recent report that lays out these newly announced tariffs and all the fast-moving financial news surrounding them.
Yeah.
Our mission, as always, is to distill the key insights for you without getting lost in, like, a sea of information. So what jumped out at you first? What felt like the most crucial aspect of this tariff announcement?
Well, the anticipation had certainly been building, but the actual specifics of the announcement, they definitely caused a notable reaction.
Mm-hmm.
There was a bit of a delay in the official release, which, tends to amplify market speculation.
Always does.
And when those tariff figures were finally revealed, they certainly were higher than some had hoped.
You can say that again. The person who put together this report mentioned their immediate surprise at just how significant some of these proposed tariffs are.
Hmm.
And it's important for us to keep our eye on the ball here. We're looking at how the financial markets are interpreting this, not judging the, fairness or accuracy of these tariffs compared to other countries' existing trade practices. That's a whole other conversation.
Precisely. And leading up to this, we heard a number of general statements from figures like Mnuchin, Lighthizer, and President Trump himself,
Right.
suggesting that the tariffs wouldn't be as drastic as some feared, maybe this idea that they might be implemented gently.
Which, as this report highlights, might have led to some earlier optimism in the market, maybe.
Possibly.
Perhaps there was a feeling that the initial anxieties were overblown. And as we've discussed before, there was a real possibility that these higher numbers could be a strategic opening move.
A negotiation tactic.
Exactly, a tactic in a larger negotiation. It certainly seems that could be the case, given what's been announced now.
It does. The report indicates that these new tariffs are slated to affect around 25 countries.
25, okay.
And the immediate response in the market was quite sharp. We saw Dow futures take a significant downturn, initially reported as a 900-point drop,
Oh,
which was quickly updated to a 1,000-point fall.
wow. That's a pretty dramatic swing from what sounds like a more positive market mood earlier in the day, right?
Yeah, the report suggests the market might have been trending upwards, maybe because of that earlier overselling, and like you said, those hopes for less aggressive tariffs.
Mm-hmm.
But this news clearly injected a dose of reality, and the market reacted accordingly.
And it wasn't just the traditional stock market that felt this volatility.
No, not at all. Bitcoin also saw a really rapid climb in price, followed by a swift decline. It briefly touched 88,473 triers before pulling back quite a bit.
That sudden spike and drop in Bitcoin is really interesting. So the report points to a likely misunderstanding as the trigger.
Seems like it, yeah. Apparently, when President Trump initially mentioned just a general 10% base tariff, the crypto market seemed to interpret that very favorably,
Ah,
leading to that quick jump upwards.
right.
However, as the more detailed information came out, it revealed a much more complex picture with varying, and in some cases much higher, proposed tariffs for specific countries.
Okay.
The report includes a table comparing the alleged current tariffs imposed by various countries on U.S. goods with the retaliatory tariffs now proposed by the U.S. And, while the precise calculation of those initial tariffs isn't our focus today,
Right. Not getting into the weeds on that.
the differences are quite striking in many instances.
Okay. Let's just highlight a few key examples from that table then, just to give people a sense of the scale. China reportedly has tariffs around 67%, and the U.S. is proposing 34%.
Mm-hmm.
The European Union is listed at about 39%, with a proposed 20% U.S. tariff.
Okay.
Then you have Vietnam, allegedly with tariffs as high as 90%,
Wow.
facing a proposed 46% from the U.S. But it's not like a uniform cut across the board, is it?
No, definitely not. The UK, for example, is listed at 10%, and the proposed U.S. tariff is also 10%.
So no change there.
Right. And then on the higher end, you have Cambodia, allegedly at 97%,
97%.
with a proposed U.S. tariff of 49%.
Okay, so almost half, but still very high.
Yeah.
What's particularly interesting to note is President Trump's stated reasoning behind this.
Yeah, he's suggesting that these proposed U.S. tariffs are roughly half of what he believes these other countries are already charging the United States.
Mm-hmm.
That's the framework he's using to justify these actions, basically.
And the report also draws attention to a pattern here. It appears that countries described as having affordable labor costs are largely the ones facing these significantly higher tariff proposals.
That's a key observation.
It hints at a potential underlying motive related to competition, maybe shifts in manufacturing.
Could be.
It makes sense that the market would respond strongly to this, as it directly affects the supply chains and, cost structures of many international businesses.
That's a very key point. However, it's also important to remember, as the report suggests, that the immediate market reaction is likely a short-term phenomenon.
Okay.
Over the longer term, financial markets tend to adapt to new realities. The analogy to the Federal Reserve's interest rate hikes is a useful one here.
Right, I remember that.
Initially, each increase caused market unease, but eventually the market adjusted to the higher interest rate environment.
So while this initial downturn is significant, we shouldn't necessarily interpret it as a permanent shift then.
Probably not. There's also the critical element of negotiation. The expectation, or maybe the hope, is that these initial high figures represent the starting point.
The opening bid.
Exactly. The opening bid in discussions that could ultimately lead to lower agreed-upon tariffs.
Mm-hmm.
And in a way, this announcement does bring a certain level of clarity to the market, even if that clarity isn't entirely welcomed.
Yeah, that's true.
Uncertainty can often be more unsettling for markets than a known situation, even if it presents challenges. Now, businesses can at least begin the process of assessing the potential impact and adjusting their strategies accordingly.
Okay, so moving on from the tariffs themselves, this report also covers a lot of other fascinating news, particularly in the technology and cryptocurrency sectors. Let's start with Tesla.
Okay.
Their stock price saw an initial uptick today based on some rumors circulating about Elon Musk potentially stepping down from his role at what's humorously being called the Department of Government Efficiency, or DOGE.
Yeah, that DOGE reference is almost certainly just a lighthearted way of referring to his various advisory roles and, interactions with government bodies.
Right. Sounds like a joke.
However, that initial positive movement proved to be pretty short-lived. After the market closed, Tesla's stock actually experienced a drop of almost 6%.
Ouch, almost 6%. So why the drop?
Well, it seems to be attributable to a combination of the broader market downturn we've been discussing.
Right, the tariff news.
And some disappointing first quarter delivery and production numbers. They significantly missed analyst expectations.
Right, the numbers were notably below forecast for both deliveries and the total number of cars produced. That'll do it.
Mm-hmm.
And to clarify the situation with Musk's rumored departure, it seems both the White House and Musk himself have publicly dismissed these rumors, right?
Yeah, they stated that he will conclude his role as a special government employee when his work is complete, so not leaving immediately.
Got it. Okay, turning our attention to TikTok, the ongoing saga continues to unfold. It appears a competitive bidding situation is developing.
It does. We're seeing interest from some perhaps unexpected players, including Tim Stokely, the founder of OnlyFans.
Really? OnlyFans?
Yeah, along with Zoop and the HBA Foundation, all reportedly putting forward late-stage bids.
And even Amazon has reportedly entered the fray with a last-minute bid, according to the New York Times.
Wow, Amazon too.
This whole situation really underscores the significant leverage the U.S. government, and specifically the Trump administration, sees in the TikTok situation.
Definitely.
We're even seeing reports suggesting President Trump is open to reducing tariffs on China as part of a deal involving TikTok.
That's a potentially significant link, isn't it? Between what might seem like two unrelated issues.
It really is.
Indeed. And the Financial Times is reporting that the White House may be nearing an endorsement of a specific deal structure for TikTok's U.S. operations.
Okay, what's the structure look like?
The proposed structure involves bringing in new outside investors, including Blackstone, who would take a significant stake. ByteDance, TikTok's parent company, would retain a minority share, maybe around 19.9%,
Okay.
and the majority ownership, over 50%, would shift to U.S. investors. The exact details of the remaining roughly 30% ownership are still somewhat unclear.
Interesting. Okay, shifting our focus to the broader economic picture. The ADP jobs report for March came in stronger than anticipated.
It did. Private companies added a significant number of jobs, 155,000 versus a forecast of about 120,000.
That's pretty solid.
Yeah, it exceeded both the revised figure for the previous month and economists' forecasts. This certainly points to continued strength in the U.S. labor market. Of
Hmm.
course, we'll be keeping a close eye on the official Bureau of Labor Statistics report due out on Friday for a more comprehensive view.
Right, always wait for the BLS. Now let's dive into the cryptocurrency space, which has seen a significant amount of activity recently. Franklin Templeton.
Yes, Franklin Templeton, a major asset management firm that already holds Bitcoin ETFs in the U.S.,
Rice?
has announced its plans to launch crypto ETPs in Europe.
Okay, ETPs, exchange-traded products.
Exactly. It's a type of security that tracks the price of an underlying asset, in this case, cryptocurrencies.
Got it.
This move by Franklin Templeton follows a similar announcement from BlackRock just last week, indicating a growing trend among traditional financial institutions to offer these types of investment vehicles in the European market.
Which operates under its own regulatory framework.
Right. Different rules over there.
And Fidelity Investments is taking things a step further.
They are. They're launching a new retirement product that will allow direct investment in cryptocurrencies, specifically Bitcoin, Ethereum, and Litecoin, within individual retirement accounts, or IRAs.
Wow, in IRAs.
Yes, and they're even waiving the associated fees.
No fees. That's huge.
It's a really significant development, showcasing the increasing acceptance of cryptocurrencies as a potential component of long-term savings. It really wasn't that long ago that the idea of directly holding crypto in a retirement account would have been considered quite, well, unconventional by many in traditional finance.
Yeah, definitely a shift. What about Brian Armstrong, the Coinbase CEO?
He's also shared some optimistic perspectives, stating his belief that cryptocurrency has now become a bipartisan issue in Washington, D.C.
Really?
Bipartisan? Yeah, with strong interest from both sides of the political spectrum in passing stablecoin legislation. This is a notable shift in sentiment.
How so?
Well, while there was some bipartisan support for the crypto industry prior to 2022, the collapses of companies like Celsius, Voyager, and FTX
Right, that whole mess.
led to increased skepticism. The renewed interest seems to be driven by a growing understanding of the potential impact of stablecoins, which are, cryptocurrencies designed to maintain a stable value relative to a traditional currency like the U.S. dollar. Their impact on the digital economy and their potential role in future bond purchases.
Ah, okay. That makes sense. We're also continuing to see interesting developments at the state level regarding Bitcoin reserves, aren't we?
We are. Several states have introduced or are considering legislation related to the state's holding of digital assets. Minnesota and Alabama, for example, have bills proposing direct state investment in Bitcoin.
Direct investment. Okay.
South Carolina is considering allocating a portion of its treasury up to 10% to digital assets.
Up to 10%. Wow.
And notably, in Oklahoma and Texas, bills related to Bitcoin reserves have actually passed the House in their respective state legislatures.
That's the House. So what's next?
They're now awaiting the governor's signature, which is reportedly expected to happen.
Okay, so potentially becoming law soon.
It's fascinating to observe the diverse approaches being taken by different states. Arizona and Utah have established regulatory frameworks for digital assets, although Utah did remove the direct Bitcoin reserve component from its bill. Unfortunately, similar plans have been paused in Wyoming, Montana, and Pennsylvania, where related bills failed to gain sufficient support.
So some progress, some setbacks.
But overall, the numbers are quite significant. 47 bills have been proposed across 26 states, with the vast majority, 41, still under active consideration.
That's a lot of activity. On the regulatory front at the federal level, we have an update on the SEC's ongoing lawsuit against Gemini.
Yes, the Securities and Exchange Commission has requested a 60-day delay in the proceeding
A delay? Why?
to explore potential settlement options in the 2023 case concerning Gemini's EARN program.
Ah, a settlement. Okay.
This suggests that there might be a possibility of reaching a resolution in that particular legal challenge, maybe avoiding a full trial.
Interesting. And despite the broader market uncertainty we've discussed, some companies are significantly increasing their Bitcoin holdings.
Absolutely. MetaPlanet, for instance, has recently purchased another substantial amount of Bitcoin, 160 BTC. That brings their total holdings to over 4,200 BTC. They have been actively adding to their position, signaling a strong belief in the long-term value proposition of Bitcoin.
They're doubling down.
Seems like it.
We're also seeing traditional companies outside of the cryptocurrency industry starting to allocate a portion of their treasury to Bitcoin too, right? Like Enish.
Yes, Enish, a Japanese game development company, has announced its plans to purchase 100 million yen worth of Bitcoin for their corporate balance sheet.
A game company buying Bitcoin. Okay.
It follows a trend we've seen with other publicly traded companies, recognizing Bitcoin as a potential store of value and maybe a diversifier for their cash reserves.
Makes sense. In terms of wider adoption, what about Sony Singapore?
They've now enabled payments using the USDC stablecoin through Crypto.com's payment service.
Okay, so people can buy Sony stuff with USDC.
Exactly. Consumers in Singapore can directly use USDC, which is pegged to the US dollar, to make purchases from Sony Electronics Singapore. It highlights the increasing integration of stablecoins into everyday transactional use.
Cool. Finally, we observed some volatility in the stablecoin market today. FDUSD.
Yeah, the FDUSD stablecoin temporarily lost its peg to the US dollar.
How much did it drop?
It dropped significantly to below 90 cents, around 0.8726 at one point,
Why? What happened?
reportedly due to some unsubstantiated bankruptcy rumors circulating in the market.
Ah, rumors again.
Interestingly, the market maker Wintermute appears to have capitalized on this temporary dip.
Oh, really? How?
Well, they potentially realized a significant profit by purchasing FDUSD at the lower price, maybe around 90 cents, and then seeing it recover back towards its intended $1 value. It traded back up near 98 cents later.
So they bought low, sold, well, closer to the peg. Smart move for them.
Potentially, yeah. And just for anyone who's not familiar, a stablecoin's peg is its intended stable value, typically $1 USD. So a depegging event signifies a significant deviation from that target.
Got it. And one last thing. Buy a bit.
Yes. In a somewhat different development within the cryptocurrency exchange landscape, Bybit has announced that it will be closing its NFT marketplace, inscription marketplace, and IDO platform
Closing them down. Why?
as part of an effort to optimize its service offerings. These platforms were quite popular during the surge in interest around non-fungible tokens and initial DGEX offerings back in the 2021 crypto boom.
Yeah, I remember that craze.
So this marks a bit of an end to that particular chapter on Bybit, although these trends are, likely to continue on other platforms within a crypto ecosystem.
Okay. So to bring it all together, it's certainly been a day packed with significant news. Obviously, President Trump's tariff announcement and its immediate reverberations through the financial markets taking center stage.
Get flay the headline.
But we've also seen a continued wave of interesting developments in the cryptocurrency space, ranging from increasing institutional adoption and evolving regulatory landscapes to some intriguing dynamics playing out within the stablecoin and exchange sectors.
Yeah, lots happening on both fronts.
Mhm.
The key things for you listening to take away are the understanding of these initial market reactions to the tariffs, but keeping them in the context of potential longer-term adjustments and, importantly, the ongoing possibilities for negotiation.
Right. It's not set in stone yet.
Exactly. And within the crypto world, we're continuing to witness a market that is maturing, attracting greater institutional interest, and navigating a really complex and evolving regulatory environment.
And on that note, here's a final thought for you to consider. Think about how these seemingly distinct events, traditional trade policies on one hand and the rapidly evolving world of digital assets on the other, might ultimately intersect and reshape the global economy in ways we can't fully anticipate right now.
That's a good point.
Consider the potential for these two forces to become increasingly intertwined in the years to come. It's definitely something worth keeping on your radar.